So we just hit my 4,700 plus price target that I had all the way back from the 4,100s in October. And I said this would likely hit by February of 2024. It ended up happening about a month and a half before my expectations. So pretty crazy. The rally that we've seen has just been absolutely relentless to the upside. We've only had sideways corrections, which has only happened twice so far. And other than that, it's just been a straight shot up. So crazy rally so far. Really happy to see this thesis play out. And also that brings the question, what's next? Because this hit about, like I said, a month and a half before I had planned that it would likely hit. It's been even more so impulsive than I thought it would be. So what I'm looking at right now is where are we going to close by the end of the month? We're actually entering a period which is typically the Santa rally period. Whenever you see strong flows to the upside, which actually would start this week. So we had a rally already. So it's potential that we already front ran that period. However, as long as it remains, relatively speaking, above the high that we made all the way back in July before this correction, then it is very bullish for continuation. And any type of pullback that we see will likely get bought up for continuation into that end of year, potentially even into January, since I don't expect anything bearish to happen until around that February, March time of 2024. So as long as we can stay above where this high is right here, as well as some of my levels that I had a bit lower, that previous range, if you look over here on the 50-minute chart, we had this previous range here, a couple key levels from it, but we broke out of it on the 11th of December from over here. So really we have about a 100-point range, 119, I guess in this case, where we closed on Friday, a point range of upside. As long as it remains above here, we're going to continue to see a bid, which just may sound crazy since we're super overextended on the daily, but it served me well to not short on the way up. And if you remember in previous videos, I had a rule for myself. I wasn't going to short until February, held long most of the way on the way up, which worked very nicely, as you can see with all this upside that I just was sharing before. But I don't expect there to be really much of a change in terms of overall structure, as crazy as that may seem, just because of how overextended we are right now. So as long as we stay above roughly that 4,600 level, which happens to be the high from over here, as well as the previous resistance for this sideways consolidation that we had, then we're likely going to continue to see a bid or maybe just range bound action up here, but nothing too extreme to the downside, at least within the next month or so. So just keep that in mind going forward, since I'm assuming a lot of people are shocked by the rally we've seen so far. Just keep that in mind as we go into early 2024. Another thing I do want to mention here is Tesla. This is an interesting one just because we broke a lot of key resistances, and not only key resistances, structure-wise, this looks beautiful. And I'm going to break it down for you right here. So a couple things I want you to notice. One, we had about a month of consolidation within a pretty tight range for Tesla, relatively speaking, since Tesla is a fairly volatile ticker. The fact that we were consolidating within about a $10 range on Tesla, super unusual. And also, this should act as a coiling spring for wherever we broke out of the range, whether it was to the downside or upside. In this case, it has been to the upside so far. And not only that, we broke out to the upside above this key supply range. So this is the supply range that for the most part was containing this consolidation. We had a fake breakout over here, but it was never able to close a daily close above this level, other than right here, which is just a little bit, I wouldn't really consider it to be a key daily close break above. But for all intents and purposes, we were staying below. We consolidated for about a month, which is just like a coiling spring, building up energy for when it decides to break. And then we broke to the upside on Thursday of last week. This is where it gets interesting. We had a break above, we had a daily close above, and we also were able to hold on Friday. There's 2 daily closes above, and not only 2 daily closes, we had a weekly close above this red box right here, this supply zone. Not only was it a weekly close above this supply zone, it also is a weekly close above this downward trend line. If you zoom out here, you can see if you follow this blue line, it goes all the way back to the July high that we had on July 18th/19th. And you can see we broke out of that for the first time successfully on the daily chart as well as the weekly. And this was also followed by volume. That's very good to see, especially in something like Tesla. That volume picked up for this breakout. Super strong close on Friday for not only the daily, but also the weekly. This is something that can continue for quite a while, potentially 260s to 270s to retest back around where this upward trend line is from previously. So this is a very bullish setup. This is something that can really run into the end of the year, especially considering that I expect the S&P 500 to stay relatively up here above 4,600 on the low end, potentially even go a little bit higher into the end of year, since again, we are in that bullish seasonality period. And as long as S&P 500 can stay up here, Tesla can continue to catch a bid. It's looking very strong right now. It was relatively strong compared to NASDAQ, which closed red on Friday, and this closed green for both Thursday and Friday. So it looks really good so far. Key downtrend break, key supply zone break followed by volume. Also, like I just said, we have this consolidation phase for about a month, which is super rare, like I said, for Tesla. So this was building up energy for about a month. We broke out, and now it's up to this week and the following week to see if we have continuation into the end of the month. I really like this. This is a trade setup that can last for multiple months potentially. Like we're seeing a pretty substantial breakout right here. As long as it stays above this red box, this previous supply zone, now a demand zone, as well as this downward trend line, we're looking at a lot more upside. Like I said, 260s, potentially 270s to retest this upward trend. So I really like this one. It also has a key support level out of this major macro demand zone. We had an inverse head and shoulders pattern. I traded this, if you remember, from all the way back in early November. We had a key break above my 215.09 level for continuation to the upside. And then we had this consolidation for a long time after. So there's an inverse head and shoulders pattern that broke out, followed by consolidation, followed by another breakout of a downtrend as well as supply zone. And now this is when things can really start to pick up for Tesla, especially with the fact that the S&P 500 as well as NASDAQ are super heightened at the moment. I would definitely recommend you keep this on your watch list at least for this week, just because this is something that can have an absolutely massive move here heading into the end of the year. And also from a risk reward perspective, if we were to even have a pullback this week, which honestly seems unlikely based on how strong it closed on Friday, but even if we had a pullback, 248.41 is a level that I have, as well as if we go a bit lower, 246.14, as well as this downward trend if we were to retest it, which seems unlikely right now, but 243-ish mid would be about that. So 3 key supports on the way down if we were to have a mini pullback this week. Regardless though, super strong breakout on both the daily, or at least 2 dailies, as well as the weekly. This is something you definitely want to watch for this week. Also, something else I want to mention, if you look here at the flow from Friday, this has been consistent for about 2, 3, maybe even 4 weeks now, where you've seen a ridiculous amount of SPX call flow or just bullish flow in general since we saw some put selling over here. Millions upon millions in premium, even like 13.1 million, 14.1 million, a lot of these out the money calls for SPX, a ton of premium behind them, and they were just relentless, hitting a lot of either short-term expirations, as you can see end of December, as well as some March expirations. This has been relentless now, like I just said, for multiple weeks, and it's shown no sign of stopping. And even earlier on in the session, you can see there were a lot of calls that were, again, out the money as well. So a lot of calls to back this rally. Really hasn't changed for the most part. So again, like I was just showing you in terms of SPX structure, it doesn't look like this is going to slow down anytime soon. Any type of pullback would likely be minor, in my opinion. That would be followed by potentially consolidation and then some more upside afterwards, just because it looks really bullish right now. And again, that is also backed by flow, and not only flow, it is also backed by dark pool levels. And this is something interesting from last week. We saw a lot of premium in the dark pools. I'm going to break it down to you really quickly here. We have 5 billion. And by the way, this was an OPEX day, so you're going to see heightened levels of dark pool activity. However, there was a lot more than normal for an OPEX. So we saw 5 billion in premium at the 469.89 level, as well as 4.5 billion at the 469.92 level. So right around this about 5-cent range, we saw well over 10 billion in dark pool prints. And here's where it gets crazier. If you scroll down here, we had a 6.9 billion print at 467.41. There was well over 20 billion worth of dark pool prints, signature dark pool prints, that is, on Friday alone. Again, it wasn't OPEX, but this is just way more than we see for any given OPEX. Honestly, any OPEX that I've ever seen since I've been tracking this data. And you can see 6.9 billion, 1.6 billion, a cent under, 1.8 billion, a cent over that. So we're looking at almost another 10 billion print, or about a 10 billion print right here at the 467.41 level, which happened to be even lower. If you look over here on SPX's chart, it was lower than we actually traded throughout that day, since previous days can also have prints, or it could even be some type of a directional print. But in this case, it was at 467.42. So I marked it on my chart here since there's a lot of premium around that level. Likely will act as a support, at least on the daily chart once it is retested. So definitely keep that in mind for this week. But again, super rare to see over 20 billion worth of signature dark pool prints in a given day, regardless if it was OPEX or not. And even crazier than that, if you look back at the previous day, for example, if we go to the 14th here, just the 14th to see, we also saw a ridiculous amount. We saw 4 billion at 471.80, as well as 1.9 billion over here at 471.82. So about that 2-cent range right here for about 6 billion in premium. So the premium has been off the charts up here. And also, we saw even more for 5.7 billion at 470.56. So this is very unusual. And also, if you look at it from just a pure technical standpoint, it's fairly unlikely that institutions would be buying at least up here in the 470s, especially considering how overextended the market is. So it's probably offloading after such a large rally. So we're definitely seeing some type of sells. And what's even more unusual on top of that, what I just showed you, you can see here if you filter for the previous week when we were range bound, so the 4th to the 8th of December, you can see here, if we scroll down, there was also quite a bit of premium within the roughly 454 to 459 range. That was this range that we traded within when we corrected to the side. So it's about 2 weeks of consolidation, just sideways consolidation here. And we saw a lot of premium as well, especially near the back half of that consolidation. So early December, like right around this range here, you can see 2.4 billion. Again, we saw over 1 billion a little bit higher up, as well as 4.9 billion at 458.32. So institutions were loading all the way up here during this consolidation, like we were talking about in previous videos, and we saw a breakout above the consolidation and just rallied even higher. And now we're seeing most likely those same institutions, whether it just be from this range here or even lower throughout the rally, those institutions that loaded, they are offloading, or at least most likely offloading up here after a successful FOMC, as well as just the fact that we're super overextended right now. So very high premium right now, definitely something you are going to want to monitor, especially with what we're seeing throughout this week. If I just show you again right here, because it really is mind-boggling to see the amount of premium just from Friday alone, but also just throughout the entire week. Just a ton of 4 billion plus prints, 5 billion in this case here. So super unusual to see that, and they're all right around this range after this major breakout. So again, it seems like it is offloading finally after such a large extended rally. So of course we can start to see some type of a mini pullback, but I do expect it to continue to be supportive, especially as long as we're above this previous range from over here. So don't expect any drastic drawdown, at least between here and around that January, February time period. So other than that though, as always, appreciate you guys watching this video, and I'll see you next time.